Okay. All right, we're going to pick up with payroll taxes payable. So we are on your course pack. We are at the top of page 45. Okay. So a company has payroll, okay, $100,000. And again, just like the sales tax, they are collecting money. They're collecting money from their employees. So they owe their employees 100,000 in my example, but they're only paying their employees 67. So they have to turn around and pay out that money to the government agencies. So in your course pack, it shows the different sources. There's 3 different places. So the state income tax, I'm sorry, the federal income tax will be paid to the IRS, the Internal Revenue Service. Social Security will be paid to Social Security. Medicare will be paid to Medicare. There are other things that can come out of your paycheck. For example, in my paycheck, I have to pay union dues. I also choose to put some money aside into a retirement account. So that's withheld from my paycheck, but then it turns around and it gets deposited by Bellevue College into my retirement account. Okay. So think about this. The company owes the employees, in my example, $100,000. They only have to pay 67 on payday, but they have to pay the balance shortly. And when I worked at PACCAR, they had to pay the balance the very next day because it was such a high amount because they have so many employees. Small businesses, they only have to pay once a quarter. So they only have to turn around and write a check to all those government agencies once a quarter. So it can be really tempting not to pay your taxes, okay? Failure to pay your payroll taxes results in immediate action by the IRS. So I used to work in payroll for a short period of time, and we had employees at PACCAR whose spouses had a small business. The employee worked for PACCAR, the employee's spouse worked for a small business. The IRS says, you are a family unit, we will go after the spouse. And so the person who ran the small business didn't pay the payroll taxes. They say, but you're married and your wife or husband is working at PACCAR. So I would get a letter from the IRS saying, you need to do something, and it's called garnishing wages. Has anybody heard that horrible term before? It's a funny term. Yeah, it's a bad term, okay? So what the IRS does, this is horrible. If you don't pay your taxes, they go to your wife or husband's employer, they send a letter, and as the payroll manager, I had to follow that letter to the T. I had to do, and what the letter said was, take 90% of that paycheck and send it to the IRS. Horrible, right? So you get a paycheck, you're expecting $70. You come home and it says $7 or something thereabouts, okay? That's their way of getting your attention. Of course, the employee calls the payroll department, me in that case, and says, what in the blankety blank happened? And I explain, and I say, get on the phone to the IRS right now and set up a payment plan, because they will not, they will help you with a payment plan, but this is their way of saying you didn't pay your taxes, so we're going after almost all of it. Okay, so it can be quite a shock. Okay, all right, so pay your taxes if you own a small business and you have employee taxes. So this is what's in your course pack. Okay, I have other categories here: medical, union dues, retirement. I made them 0 for this example, but they could have dollar amounts in them as well. All right, so we want to do 3 journal entries on page 45. Okay, so the first journal entry is, assume a corporation records its payroll. So this is the first journal entry, and maybe it happens on Wednesday and payday is on Friday. We don't know, okay? So typically there's a delay between the time when the payroll is calculated and the checks are written and all of that, okay? So this is the journal entry for the company. salary and wage expense, 100,000. Now, if you could, as a company, say, oh, let's say 70,000 was salaries and 30,000 was wage. You could have two lines, salary expense 70, wage expense 30. But I like to combine them for class just to make it less detailed. Okay, so now we have all these payables. How did we build those payables? Let's go back to the detail up here. FICA, FIT, and SIT. Okay, so let's 7650 for FICA, 21,864 for federal income tax, and this is not Washington State because we don't have a sales income tax, but I'm just putting it in as an example. State income tax, 2,922. Okay, so basically we've withheld it. These are withholdings from the payroll. Who is paying these taxes? The employee is. They pulled it out of the employee's paycheck. So the employee only gets 67,564, all the employees. And then the company is saying, we have to send this money over to the Social Security and Medicare people. We have to send this money over to the federal government, the Internal Revenue Service. We have to send this money over to the state Department of Revenue. Let's say it's Oregon State, okay? All right, so, and then this last one, salary and wages payable, that's just the difference. And that just means the employees haven't received their paychecks yet. When they cash their check, it'll be debit to salary and wages payable and credit to cash, okay? So write down that first journal entry for me. I have extra accounts there, so just cross them out. I have medical premium, union dues, retirement. They don't apply to this problem, but that just tells you that there can be other withholdings taken out of a paycheck, okay? So it's important that you understand that the salary and wage expense is based on the hours that the employees worked, which is up here. This was what the employees earned, the 100,000. That's the expense to the company. This is just who do we pay? We pay Social Security, we pay the government, we pay the state government, we pay the employees, okay? All right, what is Social Security and Medicare? Does anybody know what that is? You're all too young to know what it is, but what is it?
It's checks that are sent to you after 65, Social Security checks, and then Medicare is like healthcare that you pay for all your life for retirement.
Mm-hmm. So yeah, so in 1930 something, when Franklin Roosevelt was president, they set up Social Security. Up to that point, they'd never had it. And so poverty for our elder population was very high. They said, you know, people don't have any source of income when they're elders, but they're too old to work because they're old. And so they set up Social Security. And so the way they did it was they started taxing all of us. I wasn't around in 1930, but you get the idea. They started taxing every worker. And that money was pulled and paid into the government. And that money at the government appreciates, grows interest. And then when you're 65 or 67 or 70, you can even retire at 62. You can start drawing on your Social Security, okay? So how much do they take out of a paycheck? So employees pay 7.65%. So you can see that 7.65% of 100,000 is 7650, okay? State income tax is just going to be a percent. So that's 2922. It's almost always lower than federal. And then federal income tax, both state and federal are estimates. FICA tax is firm, it's 7.65%. Federal and state is when you go work for a company, you say, I think I have one deduction, me. And, or if you have 5 children, you'd say, I have myself, my spouse, and my 5 kids, I have 7 deductions, okay? 7 exemptions, 7, I'm declaring 7. dependents. I used the wrong word. Okay. So the more people that you have, if you have a bigger family, you're going to pay less taxes because the tax rates are based on how many people you're supporting. So if you had 20 children, you'd pay less taxes. This is just an estimate. When you come to tax time, April 15th, when you file your taxes, you do it on actual. What do you actually have? Yourself, your husband, your child, or just yourself, okay? Then you compare it to all the money that you've paid in for federal income tax for the year. And if you paid in too much, you get a refund. And if you paid in too little, you pay, when you file your tax, you put a check in for the difference, okay? Who's filed their tax returns? Anybody? Who's done a tax return?
I guess I did, except my mom was there and she helped me out.
Did you get a refund or did you have to pay, Peter? Do you remember?
No, I don't remember.
Okay. So has anybody ever gotten a refund? I have.
Yeah.
Yeah.
A lot or a little?
Yes.
A lot.
Yay. Okay. That always feels good. I won't deny it. I'm an accountant and I'm here to tell you that you are leaving money on the table when you get a refund. Why? Because the government is pulling money out of your paycheck all year long. It's pulling money out, pulling money out, pulling money out. You go do your tax return and you say, whoa, they took too much money out of my paycheck. And now I get a refund. I only really have to pay, I don't know, $2,000, but they pulled out $3,000. So I get
Oh,
a
yeah.
refund. Okay.
That's why I put a 2 on my W2.
You put a 2,
Yeah. That's about as high as I could go.
but really you're a 1, right?
Right.
Okay. So they'll take less taxes out now, right? And then you may end up paying. So the deal is, if you get a refund, you have basically given the government an interest-free loan for the year, rather than take that money, put it in a bank account and get a little interest on it. However, psychology being what it is, we all love refunds. And so the pure goal in accounting would be that you get like a less than $100 refund, or you pay less than $100 because it means your estimate was good. Okay. But we all love refunds, but I'm just here to tell you that is an interest-free loan you're making to the government. But I'd rather get a refund than pay. All right, so that's your first journal entry. Your second journal entry would be where it's payday. So we booked this journal entry March 7th, but now it's payday March 11th. And so your second journal entry is very simple because it's only recording the fact that the employees have all cashed their checks. Okay, so book that journal entry on 3/11 in the middle of page 45. And it's going to be debit salary and wages payable and credit cash. Okay, so now we've cleaned out salary and wages payable. Now the journal entry that I'm not showing you, and I could, let's go back here. I'm going to back up. I could show you how we debit these 3 accounts and credit cash. And that means we filed our quarterly payments, or our daily or our monthly payments. Okay. So at some point in the future, we're going to write checks to Social Security and Medicare, the federal government for income tax, and the state government for income tax. I'm just not showing that entry here. But there's one more entry that a company has to book before they pay the government entities. So the company itself has more taxes to pay. They have more taxes to pay. Okay. So here's how it works. And companies don't like this either, but here we go. So companies must match FICA. So the employee pays 7.65%, and the company also pays 7.65%. That's a total of 15.2% that goes into your Social Security and Medicare. Okay. The employee has to pay it. Okay. company doesn't do anything for federal or state. That's an individual thing with your employees. So they have to pay FICA. They also have to pay federal unemployment and state unemployment. Okay. And state and federal unemployment have particular tax rates, and you're taxed up to $1 limit. Okay. And then it stops being taxed. So here is the third journal entry. Now the company is recognizing the payroll tax expense. They don't recognize the tax expense for what the employees pay, but they do recognize the tax expense for the additional taxes they have to pay for each employee. Okay, so you'll see here that FICA is the same for both the employee and the employer, and then we have federal unemployment and state unemployment. So go ahead and log those in. And federal, it's pretty low rates. It's like 0.80, sorry, it's 0.8% for federal and 5.4% for state, but it stops after a certain dollar limit. So it works out to be a low amount. Okay. All right. So you guys got that one down?
I lost my page. What page are we on again?
We are on page 45.
Thanks.
You bet. All right, now we're going to do a quick practice problem. I want you to calculate somebody's gross pay and net pay. Okay.
I had a quick question.
Yes,
Where did the 13,850 come from?
it's just a total. So you know that the company owes 7.65% of payroll, which is 7.65% of 100,000. And then these numbers have to be provided, Alexis. You can't, unless they give you a percent. Okay, so they'll say the company also has to pay another 6,000 of federal unemployment tax and
Okay.
5,400 of state unemployment tax. And so what they're saying is this company, does that add up? I don't think it adds up. Did I do a typo there? Looks like I did. Now my journal entry does not balance. What if I made this? What if I made this 600? Would it balance then? I bet it would. Let's try that. Let me add that up. Let's see if I can. 7650 plus 600. There we go. Okay. No, that didn't add up either. Sorry, guys. Let's fix that one. We'll make that. Okay. All right. You guys with me? Payroll tax 13,650. FICA 7650. Federal unemployment tax 600. State unemployment tax 5,400. Okay. All right. Okay, I'm switching screens. Is that okay? All right. All right, here's a practice problem. Take a quick look at it. You're going to have 1 minute in the breakout room. Okay. If I can open them up. Let's see. So take a picture of the problem and give me her gross pay and her take-home pay. Hi, Luke. We're going into breakout rooms and we're going to do this problem right here. So take a picture of it and you are in room 4. Chase, you are also in room 4. Oh, Luke, you're in room 4. We're doing this problem. Are you there, Luke? Hey, Brianne, hi. All right, are we all back? What do we have? Put your answers or just call them out.
I got 658.23.
Okay, which question are you answering?
Oh, the practice.
No, which one? Gross earnings or net pay?
Oh, net pay.
All right. What was gross earnings? Anybody?
Uh,
Go ahead.
808.
It was, yeah. So she went from 808 to 651. Okay, so quite a little drop there.
oh, so you multiplied the FICA to the 808. Okay.
Divide by like 1.765 like the previous problem, so.
Oh, okay. So let's walk through it. So you got the 808, correct? Everybody? All right. So what's her net pay? So her federal withholding is 95, but you also have to take into account the 7.65, the FICA. Okay. So we need to calculate FICA because that's a withholding. So her net pay is her gross pay minus FICA minus her federal income taxes. So how'd you get 658, JR? I'm trying to think what would have different. That's close. That's really close. Might check your math there. Okay. So what would be the journal entry? And I didn't give you space for this in your course packs. You kind of
Oh, I know how he got it.
You know how you got it?
He subtracted $95 from 808 before doing the tax.
Oh, yeah, no, the FICA comes off the top. You would pay less taxes if you did that, but that's not how we do it. Okay. Okay, so prepare the journal entries for Betsy's pay for the period and the payment of Betsy's wages. Okay, so we're doing the employer's journal entry. What's it going to look like? Just kind of squeeze it in your course pack or on a separate sheet of paper. So so the company's going to record this. What's it going to look like in a journal entry? So we're going to use the same format that we use for journal entry number 1 on page 45. So what's this one going to look like?
Are we just shouting it out?
Yeah, you can shout it out. That'd be awesome.
Would the salaries and wage expense be 808?
Correct.
808, and then the FICA tax payable would be 61.81,
Correct.
and
Debit or credit?
that's credit. The FICA's credit.
Okay.
The salaries and wages payable, that'd be 651.18,
Correct.
and the credit. But where would the 95 go?
So what does it say in the middle of page?
Oh, that's the income tax, the federal income tax. Okay.
All right.
It's a credit.
Is a credit. Yeah.
Yeah.
So there it is. Okay. And I think I got 19, but it's just rounding. Okay. All right. And then when they pay this, what's it going to look like? What's the Wacy, what's the debit? What's the credit when they pay, when the employee cashes their check?
Oh, I did not. Wait, what?
What's the next journal entry? So now Betsy's got her check. Now she's cashed it.
Okay,
What's the
so it's salary and wages payable,
correct?
which is debit, and then credit is gonna be cash.
Correct. How much?
651.19.
Correct. Yeah. So we're just practicing those first 2 journal entries with a new problem. Okay, great. Okay. All right. Okay, our last topic is unearned revenue, and we'll start with that on Friday. And then you have worked with unearned revenue before, so this is a little bit of a review, but this refers to companies that get paid in advance by their customers. They debit cash, and they cannot call it sales revenue or service revenue because they haven't provided the service yet. But the only exchange they have so far is the company's received cash, and the company now owes the customer service or a product, debit, cash, credit, unearned revenue. Well, now we're going to talk about when they earn that revenue. And we've already done this way back in chapter 4, but this is a review. Okay, so I want to go to a short video. And this is about one of my favorite restaurants in Bellevue. And this is, I want you to watch this video. It's about sales tax and payroll tax. Okay, so I'm going to hit start. There will be subtitles. Can everybody see the video right now?
Yeah.
Okay, here we go.
There's no audio though.
No audio? Okay, hang on.
No, don't hear anything.
Well, screw that. Hold on. Let's see if we can change this. Let's try. Okay, I'm going to try it again. Tell me if there's audio.
We all pay taxes when we go.
Yeah.
Okay.
Tonight's Cairo 7 investigation will make you wonder if your restaurant is actually passing that extra money along to the state. The owner of a very successful East Side restaurant is suspected of theft and tax fraud. Good evening, Andy.
Sorry.
Yuling Wong runs Facing East Restaurant in Bellevue. She is being investigated for bilking the state out of more than $400,000. Cairo 7's Amy Clancy has been looking into this kind of tax fraud for months. So, Amy, how does it work?
Well, investigators tell me Yuling Wong used a special software program to hide her big-time profits. Although she's expected to be the first business owner in our state charged with using tax suppression software, investigators don't believe she's alone. Tonight, we'll take you inside her restaurant and explain how investigators believe she and other business owners are stealing your tax money. Facing East Taiwanese restaurant was packed every day Cairo 7 visited with hidden cameras. The restaurant just north of Bellevue Square has received glowing reviews, and now its majority owner, Yuling Wang, is suspected of stealing hundreds of thousands of dollars. Money investigators say she dutifully collected from her customers as retail sales tax, but never handed over to the state. Wang admitted to investigators that she used what's commonly known as Zapper software to hide taxable income. This video, given to Cairo 7 by a source, shows how illegal Zapper software works. Purchases and taxes are entered, but then easily deleted.
It's quite sinister in a way, right? It enables them to avoid paying sales taxes on those sales that essentially disappear from the transaction sheet, and it makes it hard to track.
Hard to track, but not impossible. Yuling Wang has been under investigation for a year and is expected to be the first charged under Washington's new law that makes sales suppression software illegal. According to documents, Wang admitted to Department of Revenue investigators that she used Zapper software for many years, which helped the restaurant underreport its taxes. Wang also admitted she kept a second set of books and paid staff under the table. Between 2010 and 2013, Wang allegedly shortchanged Washington state more than $400,000, tax dollars that should have gone to schools, law enforcement, public health, and more. Because Washington doesn't have an income tax, retail sales tax is the primary way our state is funded.
It's collected in trust by a business for the state's purpose. So they're stealing, outright stealing from you and from me and the public.
Cairo 7 made repeated attempts to get Wang's side of the story. She never responded. But Facing East isn't the only Washington restaurant allegedly using Zapper software. According to documents, there are many being investigated, along with the man who allegedly sold the software to restaurants throughout Western Washington. Attorney General Bob Ferguson is now prosecuting these cases because the loss is huge. According to Boston law professor Richard Ainsworth, the country's leading expert on Zapper software, Washington state misses out on an estimated $485 million a year because of just restaurants that use Zapper software. That money could pay for more than 9,000 teachers annually, more than 8,000 Washington State Patrol troopers, or more than 11,000 prison officers. And that $485 million unpaid by restaurants doesn't even include other businesses in Washington state that are also hiding sales tax.
And when you have the legislature going into overtime and extra sessions to be able to pass a balanced budget, you've got a Supreme Court decision requiring the state to.
Well, you get the idea. Can you hear me, guys?
Yeah, I can't believe she
Yes.
admitted to all that.
And it's very, if you ever want a fun lecture, listen to stories from people who work for the state of Washington. You may not have heard it, but many restaurants do this. Many restaurants do this. And one of the ways they catch you, and they mentioned it in this article, is they visited a couple of times and the restaurant was packed. But then when they reported sales, the sales were way too low. I mean, you can grab a menu, you can count the customers, you can estimate what the sales are. It's really easy for an auditor to do that. And that is exactly what they do. They do spot checks and they say, look, you're just not reporting all of your sales. And so all sorts of restaurants do this. I've had, a smorgasbord restaurant. One of my students' family ran a smorgasbord, a buffet cafeteria type restaurant. In my office, the IRS the State Department of Washington was going after her. And I said, well, how much are you underreporting, or how much are you reporting? And she said, we only report 80%. And I said, you got to pay. I mean, that's fraud. That's illegal. So that's what I mean. They are heartless when they catch you in these situations. Okay. So what I want to do right now is, I know I've talked to you guys already about, I'm on Team Wong. Who's on Team Wong? Her family probably needed the money. Yes. Well, if you've ever eaten at that restaurant, it is absolutely outstanding. So I can highly recommend that restaurant. So, and Rose, thank you. Yes, I can imagine they're funny. That is, but it's a hard one. It kind of brings us back to where I started with taxes. It's like, what's fair on taxes, what's not fair. And I think that sales tax and property tax put a lot of pressure on people, a lot of pressure. So, okay. So I want to switch out and go to the project. And I know some of you have seen this before, so I just want to start with the statements. And if you need to leave, that's fine. But if you don't know how to get statements out of the financials, I can walk through that with you. Okay, so let's bring up the project. And it is right here. So if you have your project, if you've downloaded it, bring it up. You're going to want to, you're actually going to want to go out to the SEC with me. Okay. Okay. All right. So let's share my screen. And
Wait, real quick.
yes, Peter.
For me, I haven't started it yet. So what did I need to do in the?
We're going to go over that right now. Okay. So you guys have joined your companies, or rather I have voluntold you here. Okay, so what is due Friday night? Come on. What is due Friday night is FS2. FS2 is each person in my class goes out and gets the financial statements. Okay. All right. So you get the financial, can you guys see this instructions here?
Yeah.
Great.
Yeah.
Okay. You're going to go to the SEC. I've got another handout. If you go to the assignment FS2 under units and modules, let's see. I have lost it now. If you go to FS2, it's right here under the chapter 10, part 1. Okay. So you click on this and you're going to see these two documents, the project and how to access financial statements. So let's start with the first document. And we're here. Okay. So you are going to go out to the SEC website. You are going to find for both companies, 1, 2, 3, 4, 5, 6 statements times 2. So you're going to have 12 pages in a Word document. Okay. Those of you that had me last quarter, we did an income statement and 2 balance sheets. Okay. We're doing a third balance sheet back, and then cash flow and stockholders' equity. So dates are really important here. So I've given you example dates. The dates you find may not be the same dates as I'm using. Your dates may be even more recent. They may be 2021, 2020, 2019. That's okay. Okay. So when you get to the SEC website, it has all the annual reports for your companies. Okay. So we're going to go over there real quick. So in my example, you're going to go to that first annual report. You're going to cut and paste the income statement, the balance sheet, and now the cash flow. That's one statement. And the statement of stockholders' equity. That's all going to come off one statement. Cut and paste it into a Word document. Don't just upload it as is. It's going to look really ugly in the Word document. You're going to need to format it. I have detailed instructions on how to make it pretty. Okay. Then you're going to go back to the SEC. You're going to look at the list of annual reports, also called 10Ks. That's what they call them. And you're going to go to the previous year's 10K. In my example, that's going to be a different number of dates. Okay, so that's going to be 2019 and 2018 in my example. Then you're going to go back to the SEC, look at the list of annual reports and go 2 years back. It says 2 years for previous 3 years, sorry. 3 years back, and you're going to get the annual report. Sorry, you're going to get the balance sheet for 3 years back. Now, why do we need all these balance sheets? Because unfortunately, balance sheets only have 2 years of data, and we need 3 years of data. So in my example, we need 2020, 2019, and 2018. Okay, so, okay, we would get that from 2 balance sheets. We would get that from 2020, 2019, and 2018. However, there are certain ratios that require the prior year's numbers, like accounts receivable turnover. like asset turnover and so forth. So we need that third year back. And so when you start working with your data, you're going to work with the most recent data you can. And it's going to be like this. Okay. So every year for the balance sheet has 2 years of data, but you always want the balance sheet with the most recent data. So your most current balance sheet is 2019, 2018 in my example. Your previous balance sheet, you're going to pull 2018 data. And then the third year back, you're going to pull 2017 data. Okay. All right. So that's FS2. So I can demo how to use the SEC website for anybody that wants to stick around. I will warn you guys that cash flow and stockholders' equity are very different statements. Okay. So when you've got it into your document, you'll upload one Word document. Don't give me pages. Don't give me other formats. Don't give me PDF. I want a Word document and upload it for me. Okay. And that's due Friday night. Okay. And then Friday, we'll do some work on the project plan contract with your teams, where you get team information, you elect a team leader, a team chair, I should say, and then you start talking about who wants to do what on the project. Okay, so let's go to that second document, which is here, how to access financial statements from the SEC. I missed it. All right. Okay, so you're going to go, I'm going to split this screen. Okay, so you're going to start out, go to www.sec website. Okay, so let's open up a screen here. SEC.gov website.
If you drag the page over all the way over to the right, it'll automatically set it halfway.
It will, like that?
If you drag the screen all the way, like click the top bar and then just drag it all the way.
Like that?
And then now hold the top and drag it all the way to the right.
Hey, thank you. Who said that? Oh, Alexis, thank you so much. Okay. All right. Okay, so here we are on the SEC website. And honestly, on the top right of the screen, click on company filings. And of course, because it's half a screen, it doesn't show. So let me make it bigger. There we go. Click on company filings, okay? All right, so I'm gonna pick a company. What did I use last quarter? Gotta find a company real quick. What were you guys studying last quarter?
Do Apple.
Nope, that's this quarter. Okay, how about Home Depot? Okay, so I'm gonna search on it. Now, maybe I already gave you our what is called ticker symbols, and that is in your team title. It'll say in parentheses your ticker symbols. So Home Depot, I'm gonna put the ticker symbol there, and there's my company, okay? So I'm gonna click on it. Okay, now it's gonna bring up all that information. So coming over here to our instructions, there's a few more instructions if you don't know the ticker symbol, but you guys already do. Okay, so then under selected filings, click on 10K. So here's selected filings over here. Click on 10K. And then you'll see the 10K, the most recent 10Ks. But be careful, you do not want a 10Q. 10K is the annual report. That's what we are going to be working with. So we've got 10Q, 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 10K. Okay, we can do it that way. That's one way. Or we can come here and say view all 10Ks. So let's click on that. Now, it's listing them by date, but if you click on, you will get a list of recent filings. To select only 10K, click on form type. So we're going to do that. Click on form type, and there's all your 10Ks. So for Home Depot, they filed March 24th, 2021. and their fiscal year ended 1/31/2021. So most of their year was 2020. So they haven't filed yet for 2021. This is mostly for 2020. That's okay. So you click on, so here you have it here. Click on the link filings for the most recent 10K. So we're going to click on filings. And then you're going to click on interactive data, which is right up here. And then you're going to click on financial statements. Click on right here. Okay, and here they are. Lots of statements. There should be 4. Why are there 6? Because they have something called parenthetical. They have something called comprehensive income. So let's look at our instructions. Okay. This should say 6 statements. I revised that this quarter. Okay. So here's your statement: income statement, balance sheet, cash flow, stockholders' equity, current year, current year, current year, current year, previous year, and 2 years back. Okay. So the important thing is when you're looking at this list, you get the right statement. So let's start with the income statement. It could be called income statement. It could also be called statement of earnings. It could also be called statement of operations. So do you see any of those statements here in this list? So which in this list, which is the income statement? Well, what do you think is the income statement?
The statement of earnings.
Yeah, so there it is. Don't stress about the word consolidated. That just means they have a lot of maybe smaller companies that are combined in Home Depot. So we'll click on this and take a look at it. Does it look like an income statement? Is revenue at the top? Is net income toward the bottom? Does it look?
Yeah.
So then you're going to cut and paste this into Word. Copy. You're going to open up a Word document. And let's just, I got to show this to you. And let's type in Home Depot because they don't keep the name. And we, okay, this is what I'm talking about. This is ugly, okay? And I know I'm going a little bit over. Okay, so this is how it looks. It's ugly. So how do we fix that? Okay, so I'm just going to show you real quick here how we fix it. So here we've copied and pasted it. Put your cursor inside the statement. Highlight your statement. Right click. Come down to table properties, click, and then select row from the tabs. Click on the box, specify height. Select 0.2. I don't think you even need, you can type it in, 0.2. Now, if you don't change this, nothing will happen. So you need to say exactly. And then you say, okay. And then that'll clean up all of that. Okay. So something to be aware of that you'll just, and the instructions are all here. Okay, so let's go back to the SEC real quick. When you come to the statement of stockholders' equity, it will be quite large. So if you have to go to more than one page vertically, that's fine. I would prefer you don't go to more than one page horizontally. Okay. So like when we paste this document into here, whenever you paste the second statement, start a new page, paste that in, and you're going to get this massive thing here. Do the same trick that I showed you. Right click. Where did it go? Right click, table properties, specify height, point 0.2, exactly okay. And we got it on one. If you have trouble with format, and we want to make that title visible, so let's do that. If you have trouble formatting, drop by my office hours tomorrow at 1:30 or reach out to me on email. Okay. All right. So I know that's new for some of you, so don't hesitate to reach out, but I will see you on Friday at 10:30.
All right.
All right. You guys
Thank you.
take care. Bye-bye.
Thank you.
See you
I
later.
was just wondering if I could ask
Bye.
or talk to
Sure,
you.
of course. Oh, the other
Sorry
thing I
haven't been
forgot
at
to
the
say,
past-
hold on. The other thing I forgot to say is, oh, hi, Luke. How are you?
Not too well.
What's going on? I miss you in class.
I have COVID, that's why.
Oh
so
my
I've
God.
been basically just sleeping all day and
I'm
trying
so
to deal with it.
sorry.